Welcome in, everybody. We're diving deep today into the explosion of real-world asset tokenization we saw in early 2025.
Yeah, it's been wild.
Our guide for this is a report called The RWA Boom of Early 2025. A Market Awakens.
Pretty catchy title, right?
Definitely grabs your attention.
Yeah, and the findings are pretty fascinating too.
So what we really want to unpack today is how this technology is reshaping finance, like we've been hearing about for years. But it's actually happening now.
Yeah, and not just for, the big institutions and hedge funds.
Exactly. This is opening up opportunities for everyday investors to get a piece of markets that used to be out of reach.
Like literally owning fractions of skyscrapers or even participating in the world of machines making financial decisions.
It's mind-blowing stuff, but it can also be a little bit overwhelming.
Yeah, for sure.
So we're going to break it down for you, explain the key concepts, and really explore what this all means for the future.
Because it's a future that's unfolding right now.
It is. And speaking of unfolding, the report highlights something really interesting. The RWA token market cap surged past $20 billion in just the first few weeks of 2025.
Yeah, that's a pretty clear sign that something big is happening.
It's huge. But what I found even more interesting is that it wasn't just some random spike. There were specific factors driving this growth.
It's like all the pieces finally clicked into place.
Yeah, and the report does a great job of laying those pieces out for us.
So what were some of the key drivers that jumped out at you?
Well, for starters, you have the technology itself maturing and becoming more robust and user-friendly.
Right. It's not just this abstract concept anymore.
Exactly. And then you have major institutions like BlackRock entering the scene.
Oh, yeah, that was a big one.
They're not exactly known for jumping on bandwagons.
Yeah.
So their involvement lends immediate credibility to the whole RWA space.
It's a signal to everyone that this is serious. This is the future.
Exactly. And at the same time, you have more and more investors finally grasping the potential of tokenization.
It's like everyone suddenly woke up and said, oh, wow, this is actually happening, and it's happening now.
So we have this perfect storm brewing, the technology's ready, the big players are on board, and investors are eager to get involved.
It's the perfect recipe for explosive growth.
And that growth is definitely happening, but it's not happening equally across all sectors.
So where are we seeing the biggest impact?
Well, from what I gathered, it seems like real estate is the real trailblazer in this tokenization gold rush.
Makes sense, right? It's a massive asset class.
Huge. And the report mentions some really eye-catching examples, like RealNOI listing a $570 million asset on Peaq Network.
Wow, that's a serious commitment.
It's not just dipping their toes in the water, they're diving headfirst.
What's interesting about that example is it shows the scale this is already happening at.
It's not just small-time players anymore.
And it's also about attracting those big institutional investors who are now taking this market seriously.
That legitimacy trickles down and encourages wider adoption.
For sure.
And then you have companies like Blocksquare in Europe establishing frameworks for real estate equity transfers on the blockchain.
Now, that's really interesting.
Yeah, this opens the door for people with maybe just a few $100s to own a tiny slice of a building instead of needing millions.
It's fractional ownership at its finest.
It is. So instead of needing vast sums, you could own a piece of a skyscraper or a luxury apartment building with a much smaller investment.
It's almost like a digital deed to a tiny percentage, except this deed is for something most of us couldn't afford otherwise.
Exactly. And because these tokens are often traded on exchanges, it also means they're theoretically easier to buy and sell compared to traditional real estate.
That's right. It's all about increased liquidity, making it easier to enter and exit positions.
So it's more flexible, more accessible, and it's not just limited to your local market.
Right. Tokenization opens up access to properties around the world.
Potentially you could own a piece of London, Tokyo, you name it.
The world is your oyster, as they say.
But here's the thing. Real estate is only one piece of this massive puzzle.
So what else are they tokenizing?
Oh, it's a long list, but the report highlights some really fascinating examples.
I'm all ears.
Well, for starters, we have tokenized debt instruments.
Now that could be a game changer.
Yeah, especially for small businesses seeking capital.
Instead of dealing with the traditional hurdles of bank loans, they could issue tokenized debt to a global pool of investors.
It's like crowdfunding on steroids.
And you, as a listener, could be a potential investor in that bakery or even a borrower using this new system.
So a bakery in, say, Argentina could get funding from people all over the world who believe in their business.
Exactly. It's about connecting capital with opportunity regardless of location.
And then there are things like tokenized carbon credits.
Now, this one is really interesting, especially given the growing interest in sustainability and combating climate change.
So the idea is you could invest in projects that are actively reducing carbon emissions and potentially profit from that.
That's one way to look at it.
It's almost like financially incentivizing people to save the planet.
I like that. It aligns financial incentives with positive environmental impact.
And then there's the creative world.
Oh, tell me more.
The report talks about the tokenization of intellectual property.
So, like music or art.
Imagine owning a piece of the rights to your favorite song or artwork.
So instead of just buying a print or a download, you could literally own a tiny fraction of the copyright.
Exactly. It could change the way artists fund their work and interact with their fans.
It's almost like a new form of patronage.
But to be honest, my brain is already a little overloaded with possibilities.
I hear you. It's a lot to take in.
And then the report throws in something even more futuristic, machine-to-machine tokenization.
Now that's where we start getting into science fiction territory.
I'm not even sure where to begin with that.
Well, the report highlights a company called Peaq Network, which is pioneering the tokenization of Internet of Things, or IoT devices.
IoT, so like our smart homes and connected cars.
All of that and more.
Right.
It essentially means your appliances, your car, even industrial machines could become tokenized assets capable of participating in the economy.
Hold on, are we talking about my refrigerator ordering groceries and paying for them with crypto?
Not quite that simple, although that's certainly a possibility down the line.
Okay, because I'm trying to wrap my head around this.
The best way to think about it is Peaq is creating a machine-to-machine economy where devices can interact and transact with each other autonomously.
So we're saying that, for example, a delivery drone could pay a self-driving truck a microtransaction for carrying its package part of the way.
Yes. Imagine autonomous vehicles coordinating traffic flow and paying each other for right-of-way, or factories optimizing production and purchasing raw materials automatically.
This is mind-blowing.
It is, isn't it? It's a whole new way of thinking about how value is created and exchanged.
But I need you to break this down for me a bit, because I get the machine-to-machine part. But how does this connect with decentralized finance, or DeFi, as everyone calls it?
Think of it this way. These tokenized machines, by performing tasks and generating value, could theoretically earn income.
Okay, so they're not just tools, they're like mini businesses.
Right. And that income could then be used in various DeFi applications. They could secure loans, participate in yield farming strategies, and even invest in other tokenized assets.
So we're creating a system where machines are not just tools, but active economic participants.
It's a profound concept, isn't it?
It's both fascinating and a little unsettling.
It definitely raises a lot of questions about the future of work automation and the role of humans in an increasingly automated world.
Which are all conversations we need to be having right now.
Absolutely.
But before we get too deep into those philosophical questions, we need to acknowledge that there are some practical challenges to overcome as well.
You're right. It can't all be smooth sailing.
So what's stopping us from living in this fully tokenized world tomorrow? What are the hurdles we need to clear?
Well, the report does a good job of highlighting three key challenges: liquidity, regulation, and security.
Now, those are three words that definitely get my attention.
And they should, because these challenges will directly impact anyone who wants to participate in this space.
So let's unpack those, starting with liquidity. I thought one of the benefits of tokenization was supposed to be increased liquidity.
It is, but here's the catch. The reality is that the markets for some of these tokenized assets, especially the newer or more niche ones, are still relatively illiquid.
So what you're saying is it's not as simple as just tokenizing everything and assuming it will instantly become easily tradable.
Right. It's not like buying Apple stock.
So let's say I buy a token that represents a fraction of a vineyard in France,
Yeah.
but then I need to sell it quickly. I might not find a buyer easily, or I might have to sell at a much lower price than I want.
Exactly. It can be a bit like trying to sell a rare antique. You need to find the right buyer who understands its value.
And without sufficient liquidity, it could be difficult to exit your position when you need to, or you might face wider spreads between the buying and selling price.
All of which can eat into your profits.
Okay, so liquidity is definitely something to keep in mind, but what's being done to address this challenge?
Well, the good news is that there are a lot of smart people working on it. The report mentions Maverick Dynamics, a company developing sophisticated market-making algorithms specifically for RWA tokens.
Okay, I'm familiar with the term algorithm, but can you refresh my memory on how these algorithms would help boost liquidity?
Sure, think of market makers as being like the referees in a game. They ensure there's always someone willing to buy or sell, which keeps the game flowing.
Makes sense.
Maverick is designing algorithms to do this automatically for tokenized assets, ensuring there are always buyers and sellers available, even for less popular assets.
So it's like having robot traders constantly analyzing the market and making sure there's enough activity to ensure a smooth flow of buying and selling.
Exactly. It's all about increasing efficiency and stability.
That's pretty cool.
Yeah.
But what about regulation? This whole tokenization thing seems like it could be a regulatory nightmare, with governments all over the world having different rules and opinions.
Oh, it definitely is a complex landscape. You're absolutely right.
It's fragmented, with different countries having different approaches, and there's no global standard yet.
Yeah, it's the Wild West out there.
So for someone like me who's interested in investing in these tokenized assets, what does that mean? What should I be aware of?
The biggest takeaway is to proceed with caution and do your research. You
Yeah.
need to understand the regulations in both the jurisdiction where the asset is located and where the token is issued.
It's not as simple as buying stock in a company.
It's a whole new ball game.
Okay, due diligence is never a bad thing, especially when dealing with something this new and complex.
I couldn't agree more.
But what about the security of these tokenized assets? I mean, blockchain is considered incredibly secure, but we're talking about real-world assets here. How do we know those assets are safe and that someone can't just create fake tokens?
That's a valid concern, and it's why robust custody solutions are essential.
Custody solutions.
Think of them as specialized vaults for the digital age.
So they're responsible for holding the physical asset that backs the token.
Exactly. If you buy a token that represents a gold bar, there's a company somewhere that's physically storing that gold bar in a secure facility.
So it's a combination of Fort Knox and high-tech digital security.
You got it.
But what about the risk of price manipulation? We've seen it in traditional markets. How do we prevent it in the world of tokenized assets?
That's where decentralized oracles come into play.
Okay, I've heard that term before, but I'm not entirely sure I follow it. Can you give me a simple example of how an oracle would prevent someone from manipulating the price of a token?
Sure, let's say someone tries to artificially inflate the price of a token that represents a piece of real estate. They start buying up large quantities of the token to drive up the price.
Okay, classic pump and dump scheme.
Right, but here's where the oracles come in. Decentralized oracles, which are pulling data from multiple sources, would quickly identify this unusual activity and flag it as potentially manipulative.
So instead of relying on one source that could be compromised or manipulated, we have a network of independent sources that are constantly verifying the information and making sure everything is on the up and up.
That's the beauty of decentralization.
It's pretty impressive.
And because these oracles are decentralized, they're much more resilient to manipulation than traditional price reporting mechanisms.
It's all about building a system that's transparent, trustworthy, and secure.
That's the foundation for a healthy and sustainable market.
And despite the challenges, it's clear that the potential impact RWA tokenization can have on the world is massive.
Oh, absolutely.
This isn't just about making it easier to buy a piece of real estate.
It goes much deeper than that.
We're talking about a potential paradigm shift in how we think about ownership, access to capital, and the very structure of our financial system.
You're absolutely right. This goes far beyond just convenience. It's about reshaping the way we interact with value itself.
Well, folks, we've covered a lot of ground in this first part of our RWA tokenization deep dive.
We've barely scratched the surface.
We've explored the incredible growth of the market, the fascinating range of assets being tokenized, and some of the key challenges that lie ahead.
We've seen how this technology is already starting to democratize access to investments, empower individuals, and blur the lines between the physical and digital worlds.
But we're just getting started. In Part 2, we'll delve even deeper into the potential impact of RWA tokenization, exploring how it could reshape global markets, disrupt entire industries, and even change the way we think about ownership and value itself.
We'll also explore some of the potential pitfalls, ethical considerations, and unforeseen consequences that we need to be aware of as this technology continues to evolve.
So buckle up and get ready for another fascinating journey into the future of finance.
Welcome back to our deep dive into the world of real-world asset tokenization.
It's great to be back. We're picking up right where we left off, exploring the potential ripple effects of this technology on a global scale. And last time we were talking about liquidity and how even though tokenization can make assets more accessible, the markets for trading those tokens are still developing.
Yeah, it's a classic chicken and egg problem.
Right.
You need enough buyers and sellers for a market to function smoothly.
Right. So what's being done to solve that? Are we just waiting for more people to jump in?
Well, that's part of it, but the industry isn't just sitting around.
So they're taking a proactive approach.
Absolutely. We're seeing the emergence of decentralized exchanges specifically designed for RWA tokens.
Interesting.
These platforms are built to address the unique challenges of trading these assets, ensuring smoother trading, even for assets that might not have huge volumes yet.
Okay, so it's like creating a specialized marketplace.
Kind of like a digital stock exchange, but tailored to the needs of tokenized assets.
But won't we also need those traditional market makers, the big financial players, to get involved for things to really take off?
Oh, absolutely. Their participation brings not just liquidity, but also established expertise and sophisticated trading strategies.
So we need a mix of the old guard and the new innovators.
Exactly. As more institutions recognize the potential of RWA tokens, we can expect to see significant growth in market depth and activity.
That makes sense. More players mean a more vibrant ecosystem?
It's all about building momentum.
But what about the elephant in the room regulation? We touched on the complexity last time, but
Yeah.
how do you see that playing out in the long run? Do we need some kind of global regulatory body for all this?
A unified global framework would be ideal, but realistically, that's a long way off.
Too many cooks in the kitchen.
You could say that. Given the varying political and economic landscapes worldwide, it's a tough nut to crack.
So what's the alternative?
What's more likely, and what we're already starting to see, is increased collaboration between regulators, industry leaders, and legal experts.
A more collaborative approach.
It's about finding common ground and establishing harmonized standards.
So instead of one big rule book, it's more about countries working together to create a set of best practices that ensure investor protection and responsible innovation.
Precisely. It's a more pragmatic approach.
But even with increased liquidity and clearer regulations, there's still the issue of security.
Right.
How do we make sure that the link between the digital token and the real-world asset is unbreakable?
That's where those specialized custody solutions we talked about become even more important.
The guardians of the digital realm.
In a sense, yes. Their role is to safeguard the physical assets that back the tokens, acting as a trusted intermediary between the digital and physical worlds.
Okay, so they're like the Fort Knox of the tokenized world.
That's a good analogy. They're responsible for maintaining the integrity of that connection.
And how do they do that?
They use a combination of physical security measures, rigorous auditing, and blockchain technology to create a tamper-proof chain of custody.
So it's a multi-layered approach.
Multiple layers of protection.
But I have to ask, even with all these safeguards, isn't there still a risk of manipulation? I mean, we've seen it happen with traditional assets. What's to stop someone from trying to manipulate the price of a tokenized asset?
It's a valid concern, and that's where those decentralized oracles we discussed play a crucial role.
The truth tellers.
They provide a tamper-proof, transparent way to feed real-time price information into the system.
Okay, I'm starting to see how all these pieces fit together.
It's about building a system that's resilient to manipulation and fosters trust and transparency.
But even with all the challenges we've discussed, what I find truly exciting is the potential impact this could have on the world.
Oh, me too. It's not just about making existing markets more efficient. It has the potential to unlock trillions of dollars in currently illiquid assets.
Trillions. That's a mind-boggling number.
Think about things like fine art, rare collectibles, even intellectual property rights.
So we're talking about democratizing access to investments that were previously out of reach for most people.
Exactly. It's about empowering individuals and communities in ways we've never seen before.
And it extends beyond individual benefits.
What do you mean?
Imagine the potential for social impact investing.
Oh, yes. That's a whole other level of impact.
I was reading about a project that's tokenizing carbon credits, allowing people to directly invest in projects that are actively combating climate change.
That's a great example. It's about aligning financial incentives with positive social and environmental impact.
Imagine tokenized microloans for entrepreneurs in developing countries, or fractional ownership of renewable energy projects.
Or even funding scientific research through tokenized grants. The possibilities are really endless.
It's almost like we're creating a whole new financial ecosystem where value can flow more freely and efficiently, benefiting not just individuals, but entire communities and even the planet itself.
That's a powerful concept.
But even with all the potential benefits, we have to acknowledge that there are also potential risks and downsides.
Of course, no technology is without its challenges.
So what are some of the potential pitfalls we should be aware of?
Well, for example, could this lead to the financialization of everything, where even basic necessities become subject to market speculation?
That's a scary thought.
It's a valid concern. If everything becomes an investable asset, Could we see increased volatility and instability in essential goods and services?
We don't want to create a world where people are priced out of basic necessities.
It's a delicate balance we need to find.
But what about data privacy and security? As more real-world information is brought onto the blockchain, how do we ensure it's protected from misuse?
That's a crucial question, and one that we need to address proactively.
We need to build in safeguards from the start.
Absolutely. And what about the potential for exacerbating existing inequalities?
If access to these new opportunities is limited to those who are already financially savvy or technologically connected,
It could widen the gap between the haves and have-nots, which is the opposite of what we want.
it's like we're at a crossroads.
Hmm.
We have this powerful tool at our disposal, but it's up to us to decide how we use it and what kind of future we want to create.
It's a collective responsibility.
We need to have these conversations now before things move too fast.
Absolutely. And as this technology continues to evolve, those conversations will only become more important.
The choices we make today will shape the world of finance and potentially the world at large for years to come.
We're writing the rules of a new game.
Well, folks, we've explored the incredible potential of RWA tokenization.
And we've acknowledged the challenges and risks that come with it.
It's a complex and evolving landscape, and it's crucial to stay informed and engaged as we navigate this new frontier.
And speaking of navigating this new frontier, in our final part, we'll delve into some of the most intriguing trends and predictions for the future of RWA tokenization.
A glimpse into the future.
We'll explore what the next decade might hold and what it means for investors, businesses, and society as a whole.
So stay tuned for a look at what the future of finance might look like. Welcome back to the Deep Dive.
It's good to be back.
We've covered a lot of ground in this deep dive into the world of RWA tokenization. We've explored the incredible growth,
Yeah, it's been a wild ride.
the vast array of assets being tokenized, and the challenges and opportunities this new landscape presents.
And we've only just scratched the surface,
We've also talked about the potential impact this technology could have on global markets,
reshaping entire industries.
but how it could reshape entire industries. But what about the future? What does the road ahead look like for RWA tokenization?
Well, one thing's for certain, the pace of innovation in this space is only going to accelerate.
So what can investors and enthusiasts like myself expect to see in the next 5 to 10 years? What are some of the big predictions?
I think we'll see a move toward even greater specialization and sophistication in terms of the types of assets being tokenized.
So we've already seen everything from real estate to carbon credits being tokenized, but what else? What's next on the horizon?
Well, the report hints at the tokenization of things like fine wine collections, rare stamps, and even intellectual property rights.
Like patents and trademarks.
Exact.
So basically, if it has value, it can be tokenized.
Essentially, yes. Anything with inherent value and a clear ownership structure could potentially be represented as a token on a blockchain.
It's almost like the entire world is becoming a giant digital marketplace.
A marketplace where ownership can be divided and traded in ways we never imagined before.
And that's where I think we'll see another big trend emerge, thematic RWA token funds.
Oh, yeah. Those are going to be huge.
Can you explain what you mean by that for those of us who are still wrapping our heads around all this?
Sure, think of it like this. Instead of investing in individual tokenized assets, you could invest in a fund that holds a basket of tokens representing a specific theme or sector.
So, for example, I could invest in a fund that focuses on renewable energy projects.
Exactly. Or a fund that invests in tokenized agricultural land or sustainable infrastructure projects.
It's like taking the concept of index funds or ETFs and applying it to the world of tokenized assets.
That's a great analogy. It allows investors to diversify their portfolios and gain exposure to specific themes without having to pick and choose individual assets.
And I imagine it also opens up more opportunities for impact investing.
Where people can align their investments with their values.
Exactly. But let's talk about the technology itself. What kind of advancements can we expect to see on the blockchain front?
Scalability is going to be a major focus.
As more assets are tokenized and the volume of transactions increases,
We'll need blockchains that can handle that load efficiently.
we don't want the system to get bogged down by too much activity.
Exactly. And interoperability will be crucial as well.
Interoperability meaning the ability for different blockchains to talk to each other.
Precisely. We need to ensure that tokens can be seamlessly traded and transferred across different platforms and jurisdictions,
So it's like creating a universal language for tokenized assets.
allowing them to move freely across the digital world.
But here's where things get really interesting. We'll likely see increased use of artificial intelligence and machine learning in managing and valuing these assets.
AI and blockchain, a powerful combination.
How do you envision AI playing a role in this space?
Well, for starters, AI could be used to analyze vast amounts of data, identify trends, and even make predictions about the future value of tokenized assets.
So instead of relying solely on human analysts, we could have AI algorithms helping us make investment decisions.
Exactly. It could make the market more efficient and potentially even more accessible for those who don't have the time or expertise to do their own in-depth research.
It's like having a personal AI investment advisor in your pocket.
That's not far off, but of course, with all this innovation comes challenges.
There are always challenges.
One of the biggest challenges will be finding the right balance between innovation and regulation.
We've talked about that quite a bit.
Governments will need to create frameworks that foster innovation while also protecting investors and ensuring market integrity.
It's a delicate balancing act,
Too much regulation could stifle innovation.
but too little could lead to chaos.
We need to find that sweet spot.
And what about data privacy and cybersecurity?
Oh, that's going to be an ongoing concern as more sensitive real-world information is brought onto the blockchain.
Absolutely, we need to ensure robust safeguards to prevent breaches and misuse.
People need to feel confident that their data is safe and secure in this new digital world.
Trust is paramount.
Couldn't agree more.
But despite the challenges, I think we can all agree that the potential benefits of RWA tokenization are simply too great to ignore.
It's a truly transformative technology.
That could change the way we think about ownership value and access to opportunity.
It's a paradigm shift.
And as we move deeper into this uncharted territory, there's one question that keeps coming back to me.
What's that?
What does this all mean for the future of ownership? If physical assets can be seamlessly transformed into tradable tokens, does that change our fundamental understanding of what it means to own something?
That's the million-dollar question, isn't it? And it's one that we'll continue to grapple with as this technology evolves.
It's a question with no easy answers,
But it's a question that we need to keep asking.
because the answers will shape the world we live in.
It's an exciting time to be alive.
It is. Well, folks, we've reached the end of our deep dive into the RWA tokenization boom.
It's been a fascinating journey.
We've explored the incredible potential of this technology.
And the challenges that lie ahead.
The future of finance is being rewritten before our very eyes.
And it's a future that we can all be a part of.
So whether you're an investor, an entrepreneur, or simply someone who's curious about the future RWA tokenization, is a topic you'll want to keep a close eye on.
Absolutely.
It's a world of possibilities waiting to be explored.
Thanks for joining us on this deep dive. Until next time.